What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, the Dow, the Nasdaq, and the S&P 500 are all pushing their all-time highs. Okay, the market is on an absolute tear. Yet a lot of people have reached out to me saying that their portfolio is still red. They're still at a loss, especially since that February 11th when the Nasdaq really started to pull back. And the only reason for that to be happening is you do not have the proper portfolio diversification. Okay, there's been a rotation of money. Investors have rotated away from some of those EV plays, okay, some of those high growth plays. Not to say that they're not going to recover, but there's just a temporary rotation of money. So in this video, I'm going to give you 7 different plays that are very prone to a high upside, okay, in the next 12 months that are all in different sectors that will help you guys diversify your portfolio. So stick around, guys. You're not going to miss this. For those of you that are new to the channel, all I ask is that you hit that like button and subscribe to join the family. If you're interested in joining our private community, it's the first thing in the description. I have my private portfolio over there. I go over all my stock and options picks. It's a great group. We have almost 400 members. We are all come together to strategize to take our portfolio to the next level. So if you're interested, guys, we'd love to have you. Check it out. Let's get into the video. I first off just want to highlight we have pretty much fully recovered from that February 11th when it started to sell off in the tech sector. Okay, let's keep that in mind. So let's take a look at what we are looking at. The first one I'm going to be talking about, guys, is AIRBNB. IPO'd late last year. We're going to switch over to the 90-day chart just to look at it. Right now, this is still a recovery play. It is not fully open. The economy is not fully open yet. Airbnb is not fully, running. Okay, and people are really not starting to travel. But if you look here, it has found that support of that $175 price point. Now is going to be a good entry for you to potentially to get into. I do want to highlight, all right, where the analysts see this potentially going up to $200. It's about a 13 to 14 potential upside. It has a high of 245, and I do think this is going to benefit off of the reopening play throughout the summer as people begin to travel and move around again. Okay, so next one we're going to look at, all right, is none other than one of the greats, Amazon, right here. It is ready to push that all-time highs. It was all the way down throughout that 3,000 point level. Let's jump out a little bit more. We're going to go to the 1 year, 1 day chart. It is pushing up against that 3,500 resistance. It's going to be hitting soon. Now, a couple things about Amazon. They're set to release their earnings very, very shortly. Okay, and as you know, because of the pandemic, Amazon has benefited very, very well due to people not wanting to go out and also the ease of use of just being able to order whatever you want on there. They're really structuring their business to make it more profitable, as well as their Prime subscriptions continue to rise. So currently it is sitting at $3,400. It is rated a strong buy all the way up to $4,100 as an average, a high of $5,200 a share, which I can totally see it getting there. Maybe not in the next 12 months, but in the next 24 to 36 months, absolutely. It's got over a 21% upside. Okay, so keep that one on your watch list. I know that's a higher price stock. However, you can definitely buy fractional shares, especially if you're trading on Robinhood. Next one we're going to get into is a little bit left. This is Cleveland Cliffs. All right, they are a iron ore and mineral mining company. Okay, they're continuing to benefit from everything that has been shifted as we are beginning to pull more and more nutrients out of the ground, shifting a little bit away from oil. Okay, and they have been an absolute tear. They are set to release their earnings, and it's just another good play to help you guys diversify your portfolio. All right, they have a moderate upside, about 13 to 14% of hitting that $21 price point. I could see it hitting it very soon as they are expected to release earnings very shortly as well. Keep that one on your watch list. This is a play that I have been in and out of for absolute years because they tend to really move. They move up, they get to a certain point around that $22 to $23 range, and then it begins to sell off a little bit. So sitting at $18, this is a good play for you guys to potentially get into. Next one we're going to talk about, okay, is Alibaba, which is another one that did have a lot of benefit from the COVID-19. However, they have been beaten down as of recently, found that support around the $220 price range, and this one is very, very undervalued. All of the heat and the pressure that has been on the Chinese stocks, okay, due to the potential for the U.S.-China trade monetary policies also being affected. But this one is very, very beaten down, guys. Currently, it's sitting at 238. This would be a good entry to get in. Let's take a look at exactly where they have that ranked at $311. It's got a 31% potential upside over the next 12 months, rated a strong buy by 23 analysts. Okay, next one, guys, I want to talk about is one of my favorite. This is one I'm going to be a forever holder. This is probably, in my opinion, one of the safest stocks that you can buy. Okay, Apple, it just continues to go up. I know that I could hold on to it for another 10 years. It's going to do another stock split. Okay, and it's just going to be worth that much more 10 years down the road. One that I never really mind buying at any price because I always believe, I know I'm going to hold on it, and I just always believe it's going to continue to go up and up and up. But they are set to release earnings very shortly as well, okay? And they're also having their Apple event next Tuesday. Now, there was speculation, and I think it's going to happen sometime soon, that they are going to release some type of news about their Apple car, okay? Their autonomous driving, all right? They might have potentials to potentially acquire companies, hint, hint, Microvision. I know that's been a little bit speculative going around. I'm a Microvision holder myself, okay? Or potential with the EV partnership. They've been in talks with numerous different manufacturers. However, nothing has really been set in stone to happen. This is a great entry to get into, guys. Next one we're going to talk about is in the financial sector. Financial sectors were absolutely beaten down due to the pandemic, due to the potential loan defaults that were going to happen. However, they've been absolutely on a tear. This is Citigroup. It still has a great potential upside. Analysts have it, I think, is rated at about $85. That's an 18 to 20% upside. A high of 123, which would be an almost 50% upside. Great opportunity to get into, especially because right now the government is continuing to buy, I think it's over $120 billion of mortgage-backed securities, okay, every single month. All right, the housing market, just check it out. The inventory is low. However, people are in no shortage of wanting to buy these homes. Refinances in the boom, and there's the mortgage market is just continually flowing and flowing and flowing, guys. So keep this one on your radar. The next one we're going to talk about is AMD. I added to my position just recently. Okay, AMD has been beaten down a little bit. One, being in the tech sector. Two, also just for the fact of we have a chip shortage. They expect the chip shortage to go all the way into 2022, 2023. Okay, I know there are certain things that are in place to help combat that, because nowadays every type of electronic, especially even vehicles nowadays, have an insane amount of microchips being used. Okay, this one's been beaten down. It found that support on that $80 to $82 price range. It looks like this is on the 180-day moving average. It looks like it might be starting to get rejected a little bit. I would wait until this to break over to 85 and let it push through that. Right now it's acting as a resistance at 180-day moving. Let it push through that. Let it ride up a little bit. Okay, I have this price target all the way at 120 for the next 14 to 16 months. They have this at about 105, which is a 27% upside. Okay, this is in the tech sector. However, it's been beaten down. So if this one hasn't been on your radar, guys, check it out. Last one we're going to talk about, which probably has the highest potential upside for it, is sitting at that support level right now. It's been beaten down because of the high growth and the speculation. This one is a long-term play, and they are really aligning this company to be a very beneficial and profitable, well-functioning machine. It has taken over the reins in Africa, as the #1 e-commerce potential. It has a analyst price target of $48. That's a 47% upside in the next 12 months. Okay, this is JMIA. Check it out, guys. Take a look at it. I would wait to get into this one until it breaks through. It is making higher lows, and like I said, it was beaten down. If you look at how the tech sector really has been played off in these high growth stocks, I should say, it really is hitting that lower highs, which is not a good sign. You're going to want to wait for that. It's hitting that stabilization of 32. Wait for it to show signs of a breakup to potentially add into your position around that $35 to $36 range. Ride that up. If you get into that $35, $36 range, you ride it back up to the highs, guys. That's an 85% gain. And I can see it getting back to that. Might take a little bit longer than it did for initially to rise, just because, like I said, high growths are not on the forefront of what's going to be running for the rest of 2022, guys. So I hope this video just gives you a little bit of different perspective of different stocks that you can get into, guys. And also, like I said, if your portfolio is still beaten down for 2021, it's time to step back and take a look and just see where you are diversified into, because chances are you are way too heavy in one sector or one stock. So take a look at that, guys. But that's it for this video, guys. I'll see you in the next one.